Hello everybody, this is Toni Turner and welcome to the market now as of about 10:30 a.m. Eastern on Friday, July 1st. Before we get started, please know that all of us at ToniTurner.com and TrendStar Trading Group wish you and yours a very safe and enjoyable 4th of July. U.S. stocks traded higher today, the first day of the third quarter, after key manufacturing reports. The S&P 500 topped the psychological key of 2100, that level this morning, as consumer discretionary led most sectors higher. Netflix climbed more than 4% this morning as the top performing stock in the sector. The ISM Manufacturing Index came in at 53.2 for June from 51.3 the month before. That was good news and above expectations of 51.4 from a Reuters poll. The employment index rose to 50.4 from 49.2 a month earlier, and that was versus expectations of 49. So things are looking up a little bit. Okay, now let's look at three charts that could give us some insight into the week to come. First of all, we're going to look, because we many times need to look at longer term charts because this is the end of the second quarter, or yesterday was, and we're starting a new quarter and a new half to 2016. It's always wise to look at longer term charts. So today we're looking at a weekly chart of the S&P 500 Spider, symbol SPY. As you all know, this is the ETF that closely follows our S&P 500 index. Now, weekly charts mean that every candle or bar you see on this chart represents 1 week of price action, obviously from Monday to Friday's close. Now, if we look at this, we see that the beautiful uptrend that carried through from the very end of 2011, and if I could draw a straight line, I could, but I can't. Anyway, this uptrend lasted from literally from 2008, but we know that there was a little bounce or a little roller coaster in 2011. And then from then on, all the way up to 2015, the middle of 2015, it was an absolutely stunningly beautiful, textbook perfect uptrend. Then, because markets move in cycles, not in straight up moves or straight down moves, we certainly hope, we had some profit taking come in here on a number of concerns from higher interest rates. In the first of 2016, we had warnings about China maybe losing some slowing economic growth there. So in the end of 2015 and certainly into the first half of this year, we've had more of a roller coaster ride. The SPY came down to a low of 181 and change, and that would be about 1810 on the S&P 500 itself. Now, our recent high up here, the June high, actually I think it was June 5th high, was back here at $212.52 on the SPY, and our low this Monday, our low on the Brexit results was $198.65, which was about 1968 on the S&P 500 itself. So as you can see here, we've rallied up, and as you probably know, we've rallied back up from Tuesday on this week. The market's saying, oh, Brexit's no big deal. Well, maybe, maybe not. I think the changes are going to have a little more impact than we think. But at any rate, what we see here is that basically we're trading between 212 and change and 181. That seems to be the range that the S&P has been trading in, or the SPY has been trading in, since the middle of 2015. Now, can it break to new highs? Sure. Although it's tested these highs at 212. Let's see, 1, 2, 3, you want to count that, 3, 4, 5. It's tested these highs over and over again. So far, it can't make it. If we get really good news going into July, possibly, just possibly, we can get new highs here. I do see a little weakness coming into the market. It would make perfect sense after a 7.5-year rally that would happen. Again, markets move in cycles. But, you know, one never knows. We know that the market's very good at making fools out of all of us who think we know where the market's going next. So, of course, we don't know where it's going next. In the coming week, we'll have to see if there's any hangover from the Brexit vote and the slowing global growth. And now, of course, we're going into earnings season, and that will present a whole new set of statistics for us starting about the second week in July. So we've got a lot going on here, busy summer months. Let's see here again, if it can break higher, good. If the S&P or the SPY breaks down, if it moves below these lows here, this past week's low on Monday of $198, if it moves below that, then maybe we have to move closer to 190 or 1900 on the S&P before we can rally. Important thing here is to watch the pullback here when it takes place, and it will at some point. Watch the pullback. Is it a higher low, or do we have to retest back down to 181 or 1800 on the S&P 500 itself? Our next chart is a chart that I thought you all might want to watch a little bit in coming weeks. I know it's going to help me determine how much risk I put on the markets. This is a daily chart of the iShares MSCI European Financials ETF. Some of the components are HSBC, Allianz, UBS, BNP Paribas, Lloyds Banking Group, RBS, which of course is Royal Bank of Scotland. Now, we know that when we have a meltdown in financials, as we did in 2007 and 8 in the U.S., and indeed all over the world, we know that when that happens, that is a dramatic effect on markets. As you can see by this ETF symbol, EUFN, as you can see, the European financials had quite a time recently, giving up gains and then falling dramatically on the UK's exit from the European Union. Indeed, Deutsche Bank got a really bad rating reduction yesterday, and of course that's the biggest lender in Germany, and Germany is the the strongest country in the Eurozone. So I am going to keep an eye on the EUFN in coming weeks. The Monday low here was $14.33 down there. Since then, it's rallied back up. Today, when I captured this chart, it was trading at $15.62. In the coming weeks, if the EUFN, I don't plan on trading it, but I'm watching it as an indicator. If it rolls over and starts lower again, I think this could, in the overall view of things, start to pressure maybe global markets and maybe U.S. markets a little lower. At any rate, it won't help. It won't help. So I will reduce maybe the shares I buy on certain stocks going long. I will certainly have my firm stops in as I normally do if the EUFN rolls over and heads lower again. Again, financial stocks and their success or lack of it certainly have an overall say in the markets. So that's just something you may want to pay attention to. Finally, we're looking at a daily chart here of the XME. This is the Spider Series S&P Metals and Mining ETF. Top components are Core Mining, Consol Energy, Stillwater Mining, Hecla, Royal Gold, Newmont Mining. You may know some of these. If we look at this chart today, when I captured it, it was trading at $25.27. We know it made lows down here in January of just under $12. If you look at this chart, and I wanted to do it on a weekly chart, but then I thought a daily chart might give you more information faster, but go back and look at a weekly or a monthly chart of the XME, and you'll see that back in 2011, this was trading at $77 and even higher than that in the years before that. So although at this moment in time it looks a little overbought, it isn't on the RSI, and the very short term, of course, has gone up 3 dramatic days in a row. I'm looking here at the 20-day moving average, the red line, the 50-day moving average, the green line, and the 200-day moving average, the black line. It is trading obviously above all of those. It is trading at resistance from its April highs. I'd be grateful if the XME would come in a little bit back down toward 24. But if not, and then bounces, of course, and then bounces. I don't want it if it goes below 23. But if it stays between 23 and say 26 or so and then starts higher, it's something I'm going to look at in the coming week as a potential place to park a small amount of money on the long side. Okay, now we'll go on to next week's economic reports. But first, please join us this coming Monday online from 4:30 to 6 p.m. Eastern for our next session of Tony's Market Club. We'll talk about which side of the market to trade, have a mini trading lesson, and I'll give you stocks and ETFs that may become ripe for high potential trades. And by the way, it's not Monday, it's Tuesday because the markets are closed. Please excuse me. This is a low-priced, high-value opportunity to learn more about the market, become a smarter trader, and make more money. So please join us. For those who cannot attend our live session, no problem. The recording of our session is available a few minutes after the session ends. And again, because of the July 4th holiday on Monday and the markets will be closed, this week's Market Club will be held on Tuesday, July 5th. So check us out at tonysmarketclub.com. And now for the coming week's economic reports. Nothing much going on Monday or Tuesday. Wednesday we have ISM services and the FOMC minutes. Thursday we have ADP employment change, jobless claims, natural gas inventories, and of course crude inventories usually come out Wednesday, but because of a holiday, next week they're coming out on Thursday as well. Friday will be our big employment, monthly employment jobs numbers, I'm going to say, with the unemployment rate. That will be a very, very important economic report for the week. Again, join us for Tony's Market Club this coming Tuesday. Don't miss out on this fantastic opportunity to raise your trading knowledge and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.